So welcome everyone. I would like to welcome you to my presentation about trading dynamic cycles. My name is Lars von Tienen from whentotrade.com, and I want to introduce you to my approach towards cycles, how to trade cycles, and I have especially designed a dynamic approach which I want to show you during the next 60 minutes. So my presentation is divided into 5 sections. In the first sections, I will explain to you what I mean with dynamic nature of cycles. So there's a special dynamic component which I introduce in the first section. Then we will move over from theory to practice, and I will show you my development about how to put this into practice on the price chart with my own indicators. And then afterwards I will show you this on the real-time examples during the last 6 months, how this behavior worked on the price chart, that you get an idea and understanding what this means with the cycles, within cycles approach. And we will close the presentation with a short summary. So let's start now with the dynamic nature of cycles. What is the dynamic nature? So first you have to deal with different effects. So the first effect I want to show you is the so-called offset shifts. So this means we have cycles with phase distortion, and you see by the red moving cycle, and it's still the same cycle as the gray one, but it's moving a little bit about the tops and the lows. So the starting point of this cycle is moving slightly during time, and this is what you will observe in real-time price behavior. So this is the first effect. Now let's move on to another effect. This is the second effect, which I call the breadth of cycles. So we deal about extraction and contraction of the same cycle. So this is a little different effect than the first one. If you have a close look on the red cycle here, which is breathing, so the starting point still stays the same as you can see here, but the length of this cycle is moving a little bit minus plus the original static cycle. So you see that the length is varying a little bit over the time. Sometimes it's a little bit smaller, sometimes it's a little bit longer, but in the end it's the same dominant cycle. So this is my main understanding. We are not talking about a different cycle by this red one, as you can compare to the gray one. It's looking quite the same. We have just a little bit breathing of the cycles, which is allowed to have the length shifting a little bit, and you clearly will see the difference. So what we do next is we will put both effects on the chart. So in the real world, for sure you will see both effects. So we have offset shifts, extraction and contraction during the same time. And this is what this animation shows you. So we see dynamic cycles here, and on the left chart this shows you the past where the analysis is done, and on the right side you see the future. This is where you do your projections on the price chart here. And if you watch closely the left side of this chart here, this is where you do your analysis. So you see the red cycle is just moving slightly around the static one here. So but now if you move over to the right side of the chart, where you see the same dynamic behavior, you see that the deviation between the red dynamic cycle and the gray static cycle is quite more bigger than on the left side on the chart. And this causes the problem in trading, because if you do static forecast, it might look good on the left side of the chart because it's just moving slightly around the static one. But if you then move over to the right side of the chart, you will see that you have a huge deviation between the theoretical static cycle and the dynamic component, which is moving at a very high rate with a difference between the cycle. And this causes a real headache if you use static cycles on the future on the right side of the chart. But the right side of the chart is quite the important one. Let me give you an example on this, why static cycles will lead to nowhere here. So we will have 2 examples here, example A, example B, and the black line here just will be the price behavior. So this will be the price chart, and we have exactly the same AB, so the same price behavior here. And in the first example A, the red one would be a detected static cycle here on the left chart of the chart. And if we do our validation, we will see that this top is this top here. Then we see just low is aligned to this low here. This top projection is the top in the price. Then we have the low in the price, which is quite close to this projected low here. So we would conclude that this detected cycle would be a valid one to use for projection. So now let's have a look at the second example B. So we have the same price, and here it's quite a little bit different detected chart on the left side here. So here we have the top aligned with the top of the price. We have the bottoming area aligned with the bottom here. Then we have the top, which is quite in alignment with the theoretical cycle top. Then we have the cycle bottom area where the low is and the move up. So if you just look at the left side of the chart, both cycles are correct on the left side. So now the interesting part comes if we move over to the right side of the chart where we would place our trading. So the first projection would give us this situation that we have in the bottoming area and would expect an up move here from this situation. However, if we would follow the second projection, this would tell us that we are at the cycle top, so we should expect a down move from here. So this is what I would say. So on the left chart, we clearly have a quite similar cycle detected, which is the same dominant cycle. But if you move over to the right side to our projection for trading, we get quite different projections. And this is exactly the reason why classic static cycle projection fail too often if you're familiar with static cycle projection. And exactly that underpins the importance for a dynamic component update. So you need a tool or you need an approach that is able to follow the two effects which I've shown you earlier. So the phase shifting and the length shifting, which will happen, which is a dynamic, which is a nature of cycles. But we try to make it too easy if we just follow static projection. So my main work during the last years was to develop an approach that is able to monitor the dynamic component and to give us an update on the dynamic component on the price chart. So this is exactly what the next section is about. So we will now move from theory to practice, and I will show you with a real life example what this will mean on the price chart. So let's have a look at this video here. So as we start with a blank chart here, on the 8th of October we will apply the standard cycle tools with nothing special. We use the Dynamic Cycle Explorer with the standard settings here, attach it to the chart as I will do it now, and as you can see, the dynamic and dominant cycle is detected automatically by this toolkit here. So you don't have to set up the cycle lengths. The actual active dominant cycle is detected automatically here, as you can see here, and this current carrier wave, as I call it, the dominant carrier wave, is plotted for sure into the future on the right side of the chart here. So this is the starting point, and this cycle shows us that we would expect the upswing to last until end of April, beginning of May. I will just mark the time window where we would expect the estimated time of arrival of the next market top here on the chart. So what we do now is we move forward in time bar by bar, and the difference to static cycle tools is that we don't see this static cycle projection here as fixed. So we re-evaluate the dominant cycle situation bar by bar. So I move forward now bar by bar. You can see the blue dot will step week by week into the future, and price will progress. So we go ahead. You can see slightly here that the dominant cycle is adjusted and changes only a little bit. So you can see price moves up nicely as the cycle suggests here, and I will go forward, and if you watch the current situation here, it's moving slightly, but only slightly. The general dominant cycle stays the same here, as we can see, and now we move into our projected time window, and now we come to the projected cycle top, which was the 29th of April here. What is interesting now, if we progress more in time, you can especially see now the dynamic behavior. So the next projected ETA point by the 27th of January. So this is the next point in time where we are interested in for the major low to come. Now we progress and expect the market to move down into the end of 2011. So again, we move forward bar by bar as time goes forward. You see price comes down nicely as projected by the dominant cycle. And now you can see what happens here. So the main dominant cycle stays still the same, but the estimated time of arrival for the next low comes now closer to the current day. You see this is moving more to the left, so price is really pushing down a lot, and during the same period you see that the ETA point now is moving to the left. So as we did our first projection here based on this dominant cycle, the first ETA was seen in January 2012. But now, as we have progressed forward in time, you see that the next low would be expected to come in more early here in the beginning of October. So this is the main point what I want to highlight in regards to dynamic cycles. So we do not see this as a static projection and just wait until January. We will reassess every day. So the market comes down heavily, and so the dynamic component checks the current phase and length setting and will expect the next low to come in more early. So and this is especially the situation here on September the 2nd. This is invalid now. Here in January we are looking for a low at the beginning of October 2011 here. You see now this dynamic cycle here stays really stable again, and as we arrive on the projected low point here, we already passed it by a week or so. This is the expected low, which has come in nicely as it was projected. The fine-tuning of this trade was done on the daily chart, and now the next top is seen somewhere here in the future. Okay, as you can see, this projection worked out nicely here. We had projected the low here in January. As we move forward in time, we followed the dynamic component, and the cycle gave us exactly the low arriving here after we progress. And you see this trade was nicely projected and traded in real time on the chart. So let's move forward. This should just be a simple example of what the dynamic component is about. So it will be more interesting to have a review with you together for the last 6 months. So what I will do now is we will walk over the last 6 months on the daily chart, and you can observe how the cycles within cycles approach works. In this example I will use 2 cycles just to make it a little bit more interesting, and this is the reason why I call it cycles within cycles approach. But the special case here is again that I deal with dynamic cycle updates, which you will see just in the video. So what I will do here, I don't cherry pick any example. I now will go over the last 6 months day by day in a non-interrupted example here. So I will go on the price chart and we will just move it. Okay, this is an example of the dynamic cycles live in action. So I want to review a current live example which occurred in the markets, especially gold and silver. I think we are all familiar with the latest drop of gold and silver at the end of March, which a very heavy drop of about I think over 20% in 2 to 3 days, and it was the biggest drop in 33 years history. So we have all these headlines in the media, which everybody was surprised by this big drop in gold and silver, and I want to use this live market situation here to review what the dynamic cycles told us about this situation here. And just to give you the takeaway, the dynamic cycles did predict the drop of gold and silver before the fact. So it was quite an easy one to spot with the dynamic cycles tool set, even in advance. And yeah, let's go over this example live here during the next minutes. So first of all, I will show you a long and short-term cycle on the gold and silver markets for the last 6 months. Yeah, to review this situation here. So first of all, let's start with two years ago in 2011 we had this parabolic move in the silver market, and I just want to mention that everything what I show here was posted in a public forum in advance. So mainly I post my analysis on the Wave 59 board. I just want to highlight this post here, which was done in the beginning of May 2011. So in the beginning of May 2011 we had this parabolic move here of silver, and I posted an analysis which showed a dominant cycle with a length of 117 bars. So this cycle was detected in 2011. It was stable for 2010, the full year. I explained this in this post here. Everybody can review it. It's in an open forum. And the interesting point was that this cycle exactly pointed to a high at the beginning of May, where we had this major top in silver here. So this was just that this cycle spotted the major top back in 2011. I just want to review it to this time because this cycle with a length of 117 is still active in the market, and that's the reason why I want to start with this analysis back in 2011, that you should not be surprised by this cycle here. So let's review the last years. What you see here is the silver chart, the silver futures chart, and I will apply now the cycles tools and show you what it showed us during the last 6 months for the year of 2013. So we will activate the Dynamic Cycle Explorer. We will use long-term standard template. Just press OK, and it was aligned to the low of here, beginning of 2004. I will align it there, and then the dynamic cycle showed up. And I will zoom in, to the more current situation here. Okay. So and now let's move back to the beginning of 2011. So this was exactly the situation at the post back in the year of 2011 here. So this was the top. This was predicted in 2011. We know all about this, so the more interesting period comes here when we look into the 2013 period. But this is what I want to review with you, how the behavior was of this cycle, which was already known. I have attached this indicator here, the Dynamic Cycle Explorer, which exactly showed you the length of 117 bars. So this was detected automatically. I've not entered any cycle length here, so this dynamic toolset is able to detect the dynamic cycle, and it rechecks it every bar to make sure that it synchronizes with the dominant market vibration here. So what we can do now is we will just do a step-by-step walk through this cycle up to the current day to see what happens. So we will step forward bar by bar and just review the major cycle lows and tops here. So price is pushing down. Here's the projected window for the next bottom to come in, and I will fast forward. You see that the cycle slightly adjust when moving forward, but that's the characteristic of dynamic cycles. And now as we progress towards the projected low here, this would be the inflection point for next up move until this point in time here, somewhere at the end of September. So we will progress fast forward. Price is pushing up here from this projected low nicely now, So we will just go forward in time until we arrive at our top projection. Okay. Now the cycle is approaching the projected top. You see prices already coming down a little bit. So this would suggest that we are at the cycle top here exactly at this point. So now we are progressed to move down into the period of December 2011. So let's again move forward in time. And you see we projected this second big drop here on the silver futures in advance. We go forward bar by bar. So the low is expected here to come a little bit more early. So price is pushing down here again. So, and here is the exact cycle low, so I will not fine tune this one. We will just stay with the basic count here, which is the low here, and progress forward in time. So now an up move is projected here in the first quarter of 2012. Let's see if the market starts to move up. We go forward here. So now it's pushing quite up. The low was perhaps a little bit too early, but we won't fine tune it here. We will just follow the simple static cycles, the dynamic cycles here. So now we're at our top projection here. So this would be the classic next cycle top here with a progressed low here somewhere in April, May 2012. So let's move forward. You see that the dynamic cycles, for sure, they are not timing right on the bar, but they are the mainly dominant cycle, and you can see that the market quite reacts to this major turning points here. So now we are progressing towards the bottoming area. So now we will monitor price closely. Okay, now we are exactly at the bottoming point here. So just waiting, price pushes down into this area here. We'll just wait after we have a reversal of price, which is coming here now. So this would be the bottom at this situation here, and we wouldn't expect now the up move of the silver futures in the period of July, August. So, and as we see, price is moving up, and we will move forward again. You see here also the dynamic cycle is very stable here. You see now the length is changing between 216, 217. The phase is adjusting a little bit to the left or to the right, and this is especially important if you deal with the dynamic cycles. But the main dominant component is quite stable, and this is what I already highlighted in the year of 2011. And you can see that this cycle is quite stable and predictive during the full year of 2011 and 2012 now. So we're quite moving towards our next projected top. So price is pushing up into this top projection here. So we'll just wait until it rolls over, which is the situation here. So now we will expect a down move into the end of the year of 2012. So we will progress forward a little bit. So I will not fine tune it here. This was the classical top here mentioned. So let's see if price is able to come down, which is happening now. You see the shifts here, which are important to follow. See cycle length is changing a little bit around the length of 117s, but it's quite stable around this length setting here. So now we are approaching our low point here somehow. So let's wait. Okay, so now price is coming down a little bit. So this would be the classic situation here So more sideways move here, but let's see if we got the next, how the next move is going on. So we'll have the top projection here somewhere in March 2013. Okay. We'll just move forward until we arrive at our long-term cycle here. So okay, and this would be the, so now we arrive at our top projection here, which is this classical one here. So now we project a down move here from this point in time, and we all know that this was the exact point at the end of March 2013 where the big drop occurred here. So this is, you see, this is the crash which was mentioned by the media hype just during this period here. So this is the behavior of the long-term dominant cycle, which is still active and was mentioned just in the year of 2011. So I will just highlight the trading if you did nothing then just following this dynamic cycle here. So I showed you the classical points. I did no fine-tuning here, just pure dynamic cycles, and this would have been the trading based on these cycles. So we have just one trade which would have not been profitable, so but all other trades would have been profitable. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9 trades, and 1 out of 9 trades was a loss or was slightly a sideways move here, and all other trades just following the classic dominant cycle would have been quite profitable here. And what I want to highlight it here is that exactly at the end of March we got this sell prediction here just ahead of the big drop. So even the long-term cycle showed us this major drop at the end of March. So I want to move on to another point. This is a long-term cycle. The main thing is to monitor a long-term and a short-term cycle in the same market. So this is especially what you maybe see here. There's my research shows that there's mainly one major long-term dominant cycle and one major short-term dominant cycle active, which interfere with each other. So you should try to define the long-term and the short-term, and that was the reason why I have included this template. So you don't have to do anything. You don't need to press the short-term or the long-term preset. So this was the example of the long-term cycle, which was already shown in the year of 2011 in an open public forum. So this is no cherry picking here. This is just the review how the cycle behaved and gave you this top projection here. So now let's move to the short-term cycle, and I want to also use an example which was posted live in advance. So this was the long-term cycle. The next example is based on short-term cycle, which was posted also in the open forum on the Wave forum. So this was posted on the 22nd of February this year, where user of the Cycles Toolkit just highlighted this possible low point here of the dominant cycle. So this was an analysis of a short-term cycle with a length detected about 40, which pointed to this low here. And now I want to review this short-term cycle also live on the chart here with you together. So now first of all, let's move back into the end of December here somehow to see how this cycle behaved. So we had a major top here, so this would the point perhaps for align the cycle here. So we would activate the Dynamic Cycle Explorer. In this case, we just use the short-term setup here, press OK, and just align it to this major top here. And this cycle now shows up here. So the cycle length again is detected completely automatically. There was no cycle length detected. This is the main feature of this toolkit here, that it's able to detect the dominant cycle length automatically. You have an alignment here between the low, the top, the low, the top. So this cycle is okay here from a short-term perspective, and it predicts a current at the current situation is a low point here. So let's just have a follow-up with this cycle here. At this point, it's projecting an up move here into the mid of January. We will do a step-by-step review. You see the shifting and adjustment of this dominant cycle, which is detected automatically by the toolkit here. So now we are at this possible top projection, which means here we have the top. Now we have predicted the down move here into this area. And it's moving down here into this period. Also price is coming down into this period. Now we're exactly at the down situation here, and this is exactly the situation of February 22nd, and this was the point in time where this cycle was shown to the public in the open forum here, because it was quite stable here and predicted now the up move into the end of March. So now let's move forward with this cycle here. You see it's adjusting here. Price is slightly moving up into this situation here, and now we are exactly on the top position here. So, which is here now at the current cycle top, which is now projecting a down move here. And then let's have a follow up here from this point in time. And as we know, this was the big drop, which was mentioned by the media, which a drop of about over 20% just in 2 to 3 days. So this is just the second example that also the short-term cycle predicted this top here and this big down move here. And so again, this is no cherry-picked example here. This cycle was posted already in February 2013, which is this low here, and the user posted an update exactly at the end of March, before the big drop occurred. So we had this prediction live ahead of time in the forum here. So you see here, I don't have cherry-picked any example to review with you in this demonstration here. This was a live example. The charts have been posted in a public forum based on the dynamic cycle toolset here, and you see how nicely they have been able to predict ahead of time the big drop in gold and silver here. The important thing to mention is here, I've shown you 2 examples. One example of the long-term cycle, which predicted this top here at the end of March, and the example of the short-term cycle, which also predicted the top here at end of March. So the important thing is that you have a cycles within cycles alignment for a major top at the end of March, predicted by cycles. So, and you would quite expect such a big move if you have a cycles within cycles alignment. So in the end, it's no surprise that we saw a big drop just at the end of March in the gold and silver markets, because we had just an alignment of the long-term and short-term dominant cycles, which have been detected in advance by the cycle toolset. And then as I've showed you, I've just used the standard settings here, and everything was also posted in advance by some cycle clients here. So this example should give you some idea of that the dynamic cycles did predict the drop of gold and silver before the fact. And it was a classic cycles within cycles alignment of a long and short-term dominant cycle. We had this long-term cycle with a length of 117. This one was active since the year of 2009, and this was posted to the public already in 2011. We had a short-term cycle with a length of around 40 bars or 40 days, which was active since December 2012, and again, this also was posted in a public forum already in February 2013. So 2 cycles are not detected after the fact and just shown you here to highlight it. These cycles have been detected in advance to show you these moves in gold and silver, and everything was posted by users of this tool set here. I hope this gives an idea about the about the possibilities if you are able to analyze dynamic cycles and use the dynamic cycles, and in the end should give you an idea how simple in the end it is if you are able to follow these cycles in the market. So in the end, we as cycle analysts have not been surprised. Again, we have not been surprised by the drop in silver. So the media hype was just, oh, why did this drop occurred? But in the end, as I showed you, if you have done your cycle analysis, we have seen that at the end of March, we had this big alignment for this big drop, and we saw this 20 to 30% drop in the markets, but the cycles told us just in advance. So I hope this was a nice live example. But I think this gave you a great impression about it. So just one comment. The cycles that have been detected on the chart have been detected automatically. So there was no pre-selection of a special cycle length. So one feature of the cycles tools is that they are able to detect the dominant cycle automatically. So nothing was prepared. It's just the standard tool set as provided. So let's have a wrap up in the end. So the first thing I would just mention as a takeaway, acquaint yourself with the dynamic nature of cycles. You have to overcome the hurdles of static cycles because static cycle approaches just simply don't work. I hope that you have got an understanding about how to follow dynamic dominant cycles on the main indices, like weekly or daily charts. Just use calendar days to trade. So that's very important if you want to monitor cycles on daily chart. You need the weekends. Cycles don't stop at weekends. And when you do trade these cycles, you have to look for stable, continuously updated estimated time of arrival projections. I showed you to mark the next projection and then until arrival to verify this projection. So if the cycle arrives at the ETA and is stable, then you have a valid projection here. And an even better thing would be if you look for an alignment of short and long-term dominant cycles, like shown in the first example. Then you have a very stable areas with the projected ETA windows if you have the dynamic cycles within cycles approach. So mainly follow the two dynamic cycles. It does not make sense to follow more than two cycles in the market, but if you can follow these two, I showed you how successful you can be with this. So and if you add on to this and start to track the dominant cycles on sentiment vehicles like the VIX, then you have a great addition to spot and confirm turning points. So this is completely the idea of measuring fear in the market and apply the cycles tools, because emotions work in the form of cycles. And what you just have to do, combine these three approaches. I just showed you the simple ones in a simple example that you are able to understand this. So you only have to put these three approaches together, and then you are able to spot each point. So in the end, use the momentum or price to confirm the trades, but this is more like common sense. For sure, we trade price and not just cycles projections here. So I hope these gave you a nice idea, because we worked bar by bar over the last 6 months, just day by day with the standard settings here. No pre-selection, no after the fact. And even I showed you that the main projection and the main turning points have been posted in the forum. So if you like this approach, I decided just 2 years ago to put this knowledge into the public. So this is how my trading works just for the last 20 years, or it took me the last 20 years to develop this. And just 2 years ago, I decided to publish this knowledge. So now there's the book out there with all information on this topic. So the complete approach, how to do it, how to deal with it, how to interpret it, is just written down in my book, Decoding the Hidden Market Rhythm. So I decided to put this into the public, so you can just visit the website. I have put up a lot of examples during the last 2 years with real-time examples. There's a discussion forum where you can follow some ideas, and for sure, if you're interested, it's available via the Wave bookstore. And I will invite you to watch news during the end of this year, because Cycles 3.0 release is just around the corner. So yeah, we will come to the end, and so I just want to thank you for your attention. Just drop me a note, send me your questions. I'm happy to receive your questions and will try to answer. So a very warm welcome and goodbye, everyone.